To the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to the final episode of 2022 of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, AJ Brown. Happy holidays, AJ. The last show of the year. Can you believe it?
I can't even believe. The other thing is it's our 60-second show. I can't believe we've been going this long and we never run out of things to talk about.
Well, the markets are exciting. It's been an interesting year. And for us, we're always looking for ways to make money, whether the market goes up, down, sideways. And the one stat that I saw today that kind of got me interested before today's show was that the market is looking to be down about 19% for the year of 2022. And so I just want to know your thoughts on that heading into the new year before we get into the rest of the show.
Except we keep seeing these bouts of optimism. I mean, when you take a look at the S&P and you look over the last year, if I take a look at the last year, I mean, despite it being down for the year, you have these moments of pure on optimism, like from the middle of June until the end of August. And then again, most recently, we had from the middle of October to just around the beginning of December. You have these I'm just so amazed at how optimistic people are.
Well, the market, from my experience, I feel like if there's not bad news, the market will always tend to want to go back up. But 19% down is quite a fall, looking at it historically. So do you think we can recover in 2023? Do you think the trend is going to continue down?
I think at least for the first half of the year, it's gonna continue down, and we need to brush up our option strategies, both our selling strategies and our strategies for trading bear markets, because we want to be on the profiting side of that equation. But at least for the first half, because what the Fed has done hasn't kicked in yet. I mean, it's just now starting to kick in, but I keep telling people it has never happened in our whole history, even at the most intense time in the 1970s and 80s, which a lot of folks who are trading now don't even remember. We've never had 3/4 point rate hikes, 4 of them in a row. And so traditionally, I mean, it's just science. This stuff takes time to kick in. And so we're going to see the effects of what's happened kick in. And the Fed has a reputation problem. And so they've staked their whole reputation on making their reputation better, on controlling this inflation. So they're not going to be putting on the brakes anytime soon. So, yeah, I think we're in for some more down. Bubble deflation, recalibration, whatever you want to call it. So we need to brush up on all of our skills because we can profit on this.
Yeah, and last week's show we touched a little bit on, has the Fed gone too far, and we discussed that. And we are going to be starting to see the effects of that. So the next meeting is going to be very, very interesting. I think it's going to be a big market mover.
Yeah.
In terms of this week, we don't have a lot of economic news. It's kind of what we call like the holiday trading session. I think yesterday the market was up 300. Now we're down, giving back about half of that. Not too much other news this week, but maybe we want to touch on the balance sheet, right? Because they're still doing that stuff. Given whether the volume's low or not, the Fed is still moving their money around in the background.
So the one thing is we never got our Santa Claus rally. Everybody expects a Santa Claus rally, and we never got one this year. So that's kind of a coal in our stocking, which kind of put that last nail into our coffin. But yeah, the Fed continues selling. I mean, if I take a look here, I'll bring over my web page over here. If I continue taking a look over here at the Fed balance sheet. Let's see if we can pull it up here. I've got a couple of different windows open. I feel like I'm Steve Kornacki here trying to figure out how things work. Okay, but he always comes out, he pulls like a piece of paper off. So the last time that this graph was updated was Wednesday, December 21st, and we're down about half a trillion dollars, $500 billion. And if I take a look at the release that just happened yesterday evening, like we've sold off about another, we're down at, depending on which measurement they're using, we're down about another 50 billion. Now their target is to be selling off these bonds at about 95 billion. So they're about halfway to their target of how much they're selling every week. And what's interesting is this selling of bonds is making the bonds market produce higher yields, right? Because if there's more bonds to go, fewer bonds to go around because they're selling them and then the money is getting shredded, right? The yields go up. And so that higher yield in bonds is actually attracting investors, and investors are leaving other more riskier assets and jumping into these high yield bonds, which is then actually driving. It's neat to watch these forces, Sip. It's driving the bond rates a little bit down. It's causing our mortgages to actually come down off their highs as far as interest rates are concerned. But it is causing this huge influx of money, investor money, moving. It's called sector rotation, moving from really risky like endeavors from 2019, 2020, and even into 2021 into these bond market. So yeah, they keep going. They want to keep going. I mean, we are talking about a $500 billion. They'd like to shave off another $4 trillion during the years of 2023, 2024, and 2025. And so if you could imagine what's been happening now, yeah, this is going to be a big deal going forward. That with the interest rate hikes, I mean, it doesn't look good. So like I keep telling everybody, brush off those option skills. Options have a way to, profit mathematically from all these different scenarios. So on your personal life, cut back on discretionary spending, right? Don't borrow unless you're going to be buying something that's an asset. If you go back to kind of Robert Kiyosaki's Rich Dad, Poor Dad type advice, he says, if you're going to be buying an asset and a liability, so different than how accountants or tax preparers might call it, an asset is anything you buy that will make you money, right? It'll give you cash flow. Right now, cash flow is everything. And a liability is something that'll only cost you money. So your personal house is actually a liability, despite what your tax accountant might tell you, right? But a rental property is an asset. So unless you're buying assets in 2023, don't borrow money, right? Try to pay off all that debt because interest rates are going up. And unless you can justify the holding costs through making money, it doesn't make sense. So that in your personal life, tighten up the belt, take care, make sure you've got personal savings. But in your investor, hat, brush up on those options because we can be positioned to make a lot of money right now.
Yeah, and I mean, that's really the whole reason we do the show, and we've done 62 episodes, is to later on in the show go over specific examples. I know we always like to throw in your trade of the week.
Yeah.
If anybody's watching that has a ticker that you want us to go over, feel free to throw it in the chat. We'll go through there too. The one thing that is on our notes list is the VIX, but I imagine there's nothing going on in the VIX, right? If the volume this week with the holidays is so low, I would just assume it's always like low during the last 2 weeks of the year.
Yeah, absolutely. So the VIX is a measurement of how much fear and confidence is in the current day's trading, right? And so the VIX has, like you said, been kind of going sideways. And if we go back and it's at a low, it's not as low as it could be, right? It has gone lower. In fact, here's an interesting, almost kind of like, it's not as scientific, it's mostly like a psychological experiment. But if we look at the VIX over this is 10 years. Let's go all the way back since it was created in the 1980s. You'll see that I've got this dotted line here that is the average, right, of all of the VIX data. And what we're looking at here, the VIX kind of measures fear. This is fear. And this is confidence, right? So if you get below the line, it means that investors are very confident about what's happening in the markets these days. Whereas if you're above the line, it means they're uncertain, they're confused, they're afraid, right? And so it's neat because we only ever get so much confidence. I mean, when we're confident for a long time. I mean, literally from 2011 to 2019, we were very confident as investors. From 2003 to 2007, we were very confident. But the confidence only gets to a certain level below the line. When we become afraid, man, we get like full on manic. If you notice, whenever there's fear, it doesn't just stop like confidence does at a certain level. It's just so cool to watch, right? Because traders are always, especially newbie traders, are like, there's some sort of mathematical code to break. Not really. It's a complete psychology experiment. And this is just one of my favorite things to look at it as when people become afraid, they go off the charts. When they become confident, sadly, people don't become crazy confident, which would be neat to see, wouldn't it?
Totally. And if there was a gauge that helped us know this, that'd be even better. But I think you're right. People, they only go to one extreme. Everything else is kind of subtle.
Yeah. It's like how we're wired. Coming back to the S&P 500 really quick, there's very little volume right now. So a lot of people don't understand this, but when there's every day is almost like a jury trial, right? Between the bulls and the bears. Those are the two sides of the argument. And the jury is the number of investors, right? And so every day we get we serve a judgment to the market as to whether we're going to be bullish or bearish. And it's the number of people, the number of jurors who decide that. So if you have, like, on a normal trading day, 100 jurors, and say 90 of them are bulls and 10 of them are bears, then the day is going to wind up being a bullish day. And on the volume chart, you'll see a certain amount of volume. And I'm not looking at the volume chart. This is the MACD. But if we pull up, for instance, the SPY, let's pull up the SPY, which is the ETF that mirrors the S&P 500. You can see the volume tells us how many jurors were present that day. And so think about this, right? During this period, especially this week between the Christmas holidays, the Hanukkah holidays, the Kwanzaa, all the different holidays, and then you've got your New Year's, which I think is pretty much celebrated around the globe. There's very few jurors, meaning a lot of the investors have left the building, right? They're spending time with their family, and so who's left? I always like to have, this is something I was taught in the late 90s. When I'm analyzing a particular stock or an ETF or an index, think of the avatar of the person who's interested in that particular asset, right? What do they look like? What do they, how much money do they make? And who are they? And so I think about who's left over, who doesn't go do normal things like spend this week with their family, go off into the country. Like, I'm at my beach house. I love it in the winter when it's quiet here. My wife, my kid and I, and it's just so quiet here and it's so peaceful. And we go and hang out at the ocean. We don't go in because it's a little cold, but we go, who's not doing that? And I always get this avatar of freaking Ebenezer Scrooge, right? That's who's trading these days instead of doing normal stuff, right? And so he's an extreme person. If you would remember the whole Christmas Carol thing, he was kind of an extreme dude. Well, what we say is that the market is, being moved by a few extreme voices right now. So when all the traders come back next week after, all this time and they get back in there, they usually take inventory of what has happened and then they do a huge correction. So you can see that there's been very little volume. And so I don't want anybody to be acting on these trade signals that have been coming, because what's happened is these 100 jurors has been reduced, right? It's probably down as much as like 50%. So it's down to 50 jurors. And now it's probably the normal folks who are out. And so now you've got this rating of 40 versus 10. And so the market could totally be swayed one way or another because these extreme voices are speaking loudly. So I just wanted to put that out there. I typically tell my traders not to trade this week because all of the signals could get reversed when sane minds come back.
Yeah, and I feel like this year we're in a unique position with the new year because it's over a weekend. So it's not like one of these goofy 4-day weekends. It's like
right.
Like this week we predicted would be fairly slow. Next week it's the new
by
year.
Wednesday.
Everybody's by Wednesday. By Wednesday we're going to be getting back to those volume numbers, if not even some spikes, because new money, new year, new shifts need to kick in. So we'll definitely keep an eye on that. All right. Before we move on to the next segment, I just threw a link in the chat. So if you want to learn more about Trading Trainer and AJ's strategies and how to utilize options in your portfolio, we've got a free daily workshop. The link is in the chat. Head on over there. If you haven't checked that out, it's wonderful. You're going to definitely get a lot of insight into what we're doing over here. Let's go ahead and take a break real quick. And then once again, I did see a few tickers come in. If anybody has a ticker that you want us to review, throw it in the chat and we'll see if we can get there. Otherwise, we'll be right back.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. Tesla was so nice.
Well, Tesla's been having their problems this week, right? In the news, it's coming down hard. And then Elon, I guess everyone's just thinking Elon's busy with Twitter, that he doesn't have time to spend running this auto company.
That's right. And, I know, I hadn't realized it, but one of my best friend's sister, very smart, Silicon Valley born and bred. She's one of the Tesla engineers. Those engineers, I mean, one thing Elon does, even though sometimes he's off the rails with his rhetoric, is he hires the best engineers for all of his different companies. And they really have thought through a lot of things on those Tesla cars. So like Elon, don't like Elon, his products seem to be like top notch.
Yeah, without a doubt. I mean, if no one's ever been in a Tesla, make it a point to do so, because you can see it in the product, right?
Yeah.
Everything else kind of becomes exorbitant in this is what it's like to have a publicly traded company with a exuberant CEO and et cetera and et cetera. So yeah. All right. So let's go ahead and move into our in the news topic, right? You might have a little bit more insight here, but a few extreme voices speaking loudly. Who particularly are you talking about?
Well, let's also, yes. And I want to talk about some of these in the news. I want to talk about, we've been talking about a lot of these companies that are getting pretty much wiped out by Wall Street. We talked about Rivian. We talked about Lucid. We talked about Peloton. We talked about Carvana. Carvana has really, what is the ticker there? CVNA, I believe. Yeah. Carvana really got, if I show you let's just look at a 2-year chart. Carvana was trading up close to $375. They're down at $4.50. I mean, these companies, Wall Street has basically said, we're done funding you. Well, how about another company I wanted to add to that list? Smile Direct. When Smile Direct was at its heyday, it got up to about $16 a share. It's trading at 33 cents a share. Smile Direct was that company that you could get braces through the mail, basically. They'd scan your teeth over I don't know how it worked, but Wall Street's basically saying you're done. You're done. So I guess the question is a lot of these companies have really amazing innovation in tech. And there are some folks who are out there saying we should have some sort of regulation that doesn't just let profit, because investors want profit. People in the stock market want profit. And so if they don't see profit, and of course now we have tools. I mean, I use these tools where we can short a company. If we think the company is going to go down in value, we'll make money on it. But in effect, if a bunch of people short or buy put options against a company, it actually affects the company, right? It actually will make the company lose investment dollars. And so should we be reined in as investors who are basically just playing the game? Because in the end result, it means that some companies that have been cutting edge in technology innovation, their technology gets lost. So should we be reining that in? I guess that's the question for us this week.
Well, my perspective, and I saw a little bit of chatter on Twitter with a couple graphs, is the urgency of some of these companies to go public, right? Like they might be going public too quickly to cash out, and then the rest of the market and the investors are left with a stock that just continues to go down over time, and that's a different approach, because the creators of that business are doing the financial engineering of, hey, we've got something cool, let's grow it real fast, let's take it public, let's cash out, and then it kind of gets lost. So in a way, I see that perspective, but also I think it also tells us how efficient the U.S. market is, right? And that in the grand scheme of things might be a good thing, because if you are a company and you have to produce quarterly results and they're not good and investors aren't excited about it, then you shouldn't go up. And I see value in that efficiency, especially when you look at other markets as in the United States. And so I guess when a company goes even further, right? Don't they just go bankrupt, or somebody buys them out and they go private and then they consolidate and they go public again? Isn't that kind of like what happens to some of these names?
It's true. And I think a lot of their tech, I mean, I can see both sides, but I don't think tech ever dies, because a lot of the engineers, a lot of the scientists in these companies, they make a name for themselves, making their tech public and published. And even if the tech goes away for 5 or 10 years, somebody always unearths it. I know that now that nuclear is finally getting funding and stuff like that, tech from the 1950s and 60s that people thought was lost, even the scientists thought this is the end, is being dug back up. So the tech winds up being, once something's discovered, I don't think it ever goes away. And if it was good tech, you're right, the people made bad business decisions, but I think the tech survives. So I'm okay letting the markets kind of make decisions on things. And what's even cooler now is, thanks to Reddit and thanks to these different groups that allow folks like us to basically communicate and pool our money together in the same direction, we can have as much force in the investor world. I mean, it was proven with GameStop. It was proven with AMC. If we don't like what Wall Street is doing, the big money hedge fund, when they short a company, they actually affect the company. We've proven that we can totally put Wall Street on edge. So that's a cool balance and check, that even though social media and the fact that we can now easier find our tribe online has been getting a couple of dings, there's definitely positives to finding like-minded people online. And that's one of them, keeping, big money in check. with what they're doing. So I think it all works out at the end. We just have to be ready to evolve.
Yeah, and fortunately for us in the community at Trading Trainer, is that we are looking to take advantage of these moves. And
Yeah.
the beautiful thing about options, if anybody watching, listening has never traded options, is options give you that ability to profit when a name like this is down and it's going to continue to go down and things aren't looking good. And we're not trying to, wish bad upon the company. This
No.
is just the game that we play as investors, and these are the tools that are at our disposal.
Yeah,
And
when you really delve into options, guys and gals, man, you become it's like the Leatherman, those Leatherman tools or the jackknife, Swiss Army knife. An option allows you to take advantage of so many different things. It's funny, Sip. I was talking to some folks that are new to our program. They actually jumped right into the coaching program that we have. And I always like to interview them personally. Our coaching clients who decide they want to work with us one-on-one get kind of the VIP treatment. And I always get them on the phone and talk to them before we assign them to a coach. And I always ask, what's your experience with options? And I get so many folks who give me their, and they're always off because a lot of people think that they know everything about options when they know the difference between a call and a put. But options are so much more nuanced than just call or put. It's more than just a stock replacement. A lot of people think options, you use them instead of stock and they have leverage. But that's just one way to use them. And there's about 26 other ways to use them. We could profit on the fact that they're wasting assets. We can profit on the fact that they are influenced by implied volatilities. I mean, it's just mind blowing. And if you can wrap your mind even around a few of these other ways to trade options, you'll be safe in the biggest downturns or the biggest stalled markets. It doesn't matter what the frickin' Fed is doing. You have that toolkit. You have that Leatherman that you can take advantage of. I can't. I'm just so excited for 2023 as an investor.
Yeah, and since you mentioned the one-on-one trading, I went ahead and threw the link to that in the chat as well. I know it's been really the schedule has been piling up the last 2 weeks, and that's exciting to hear. So if you're looking for some help in 2023, head on over to that link, schedule an appointment. Someone will be able to answer all of your questions. And, let's take advantage of, what's going to happen in 2023. If the market's going to fall, well, let's just make some money off of it rather than sitting on the sidelines and, being beat up by it. So the link is in there. Moving on to the exciting stuff, right? People want to know what you're looking at, what you're trading. And so this week's pick of the week, AJ's pick of the week, is something we've discussed in the past. This is Antero Resources, ticker symbol AR, and you're seeing an entry position setting up. Is that correct?
Yeah. So Antero Resources, petroleum company based out of Denver. They are known for going for petroleum where other people won't. Like they find the unique places. Right around where I am, not too far where I am in West Virginia, they've got a whole bunch of stuff going on. What I like about them is, number one, they make money. So every earnings season they're reporting not even a little bit of money. They're making nice amounts of money. So that's great. They're not giving a dividend. I would like it even more if there's anybody who's either affiliated with the company or can influence the company, you should tell them to offer their investors a dividend, because that would solidify them as a long-term value play. But you can see they've been making money. I'm looking at the last 2 years. They've been pretty much making money the whole time, which is great. But you'll also notice that they're in this sideways pattern, and that's exactly what we featured them in a few months ago. Well, I wanted to feature them again as my pick of the week for a couple reasons. Number one is it looks like they're forming a bottom. In fact, I like to use this fast MACD as one of my signaling sources. They're kind of vacillating, but at some point here in the next few days, it looks like we're going to get a signal that a bottom, a valid signal, a signal on a heavier volume, that a bottom has been found. And so if you followed us before and you had set up your initial covering position as either a shorted stock or as a back month deep in the money put option, far out in time put option, then now would be the time for you to sell your premium, set up your income trade, and also set up your secondary income trade and also your protection by buying a 3 to 6 month out of the money call option. I'd probably be buying it with a $40 strike price. And so selling I'm going to wait for my signal to come, but it looks like I'll be selling the $30 put and buying the $40 call once I get my verified signal. And then that's it. You just let it go. You let that theta decay work, which is the theta decay is the academic term for saying letting time pass by and letting the sold option get closer to zero, basically make money on time passing by. And at the same time, that protective call will protect us for anything that happens that might shoot the stock up. And we'll be set until the third Friday of January. We won't have to do anything until that happens, and that'll be just income in our pocket. And on the contrary, if you missed our trade example to set up the initial covering position, this would be a signal for an initial covering position. So get ready to either buy some of this stock or buy a deep in the money, far out in time call option, so that we'll be ready when we hit that next top to then set up the income trade, buy the protection. That's how we do it.
That's how we do it. That's how we've been doing it for 63 episodes. So hopefully people are paying attention and they're adding these tickers to their watch list, and they're either trading in their demo or they're advancing their, their professional account. That's what we're here for. All right. We've got 2 live tickers, and we've got 3 speed rounds. So let's start with the live tickers because these are probably we can quickly run through them. James is interested in KO. I believe that's Coca-Cola.
Yeah. Forming a top. Little bit on the expensive side. So, remember when we're talking about the price of the underlying, you don't just factor in the price of the stock or the price of the back month deep in the money, far out in time call option. You also price in the expected or worst case scenario loss that can be incurred. And you want to correlate that with your portfolio size and make sure you then figure out your position. And so what that usually means is if you're in the $60 range, you need a bigger portfolio to trade this. That's what it all boils down to. So I would actually say for this price underlying symbol, you probably need over a $50, maybe closer to $100,000 portfolio, which a lot of us have, right? We've either been trading for a while or we've had an IRA that's been accumulating for decades. So with that said, Coca-Cola makes money. Look at the earnings. They're always making money, 70 cents, 69 cents, and they're giving that money back to their investors. Great signs of a company we want to sell premium against. I'm going to just take a quick look here, going back a couple years. Yeah, Coca-Cola's been in this sideways channel, whether it's a sideways channel trading down here, or if they do a slight step function increase, they're sideways channeling again. Let me just zoom back into the more current price action. So what I would be thinking about doing here, depending on if I already owned the stock, now's the time to be selling premium. So when we get our solid top signal, it looks like there's a top signal developing this evening. If it does develop, I'm going to want to make sure that I've got volume validation. So however you do that, if you look at volume itself, if you look at accumulation distribution indicator, if you look at the on balance volume indicator, if you look at Mark Shakin's indicator, the Shakin oscillator, make sure that there's volume behind it, because we've already talked about in the beginning of the show that volume is the great validator. And this particular week is a few extreme voices speaking loudly, meaning we haven't had the volume. Make sure that the top signal gets a volume validation. If we get that and you own the stock, let's sell some premium. So that means sell some premium that's near term, probably expiring the third Friday of January, unless you're doing weeklies. If you're doing weeklies, go 3 to 5 weeks out. Near term, at the money, error to the side of out of the money. It looks like with Coca-Cola, and I'm not even worrying about liquidity with Coca-Cola, because
It's Coca-Cola.
it's Coca-Cola. And so if I look over here at the money, yeah, they're trading every dollar. If you want to go with the, they're also trading every $2.50. So they're trading on multiple exchanges. Maybe go with the $65 if you want a lot of liquidity. I see 33,000 contracts. You'll have no problem buying and selling Coca-Cola options. So yeah, let's sell that, and then we'll buy some protection. Let's go 3 to 6 months out. We always go 3 to 6 months out with our protection. I prefer erring on the 6-month side. And so we'll buy some protection, probably maybe down here. You could go as light as 60 or go down as low as 55 with your put option 3 to 6 months out, and then just let time work, right? And so I like that. If you can afford it, great symbol.
Awesome. That's Coca-Cola. Moving on to another name that we've covered in a couple episodes, and that's Kroger, ticker symbol KR, which I think we had, position setting up.
Yeah. And so again, this looks like a bottom is being formed, although again, make sure we've got the volume. It actually, the bottom signal might have gotten reversed, or it will reverse today. So we want to make sure that we wait for the real bottom signal. If you got in on the previous bottom signal, and I'm looking at my fast MACD here, I might have gotten in on a bottom signal. Again, a lot of people have a trouble with this whole volume validation, but I come back to that discussion that we had a little bit before, which is volume is the great validator. If there's no volume there, it means it's a few voices speaking loudly. And when the rest of the investors that are on the sidelines come back in, they could change the whole direction of everything. But if you did get in the days right before the Christmas holiday, I don't think that's a problem. It just looks like we're going to be testing for a double bottom here. But yeah, if you didn't get in, let's look for the next double bottom. Let's get in here by buying some Kroger stock. We'll wait for it to top out. When it tops out, that's when we're going to think about selling premium, buying protection. If you had gotten into Kroger back in the beginning of December, end of November, by shorting it, well, this is when we set up that income trade. Sell the premium, buy the protection. Great stock. I mean, they make money. It's a grocery store chain, and they're doing a lot of mergers and acquisitions. In fact, people are kind of getting antsy about Kroger doing all the mergers and acquisition, because they're like becoming the one grocery store chain for all of the United States behind the scenes. But they offer great dividends. As an investor, I'd want some Kroger stock.
You know what's funny about Kroger is I was never a coupon guy, but they built such a good app that makes couponing like kind of legit. Like you just scan the code, it like loads it in there, you scan, and it like has made the grocery experience a little bit more innovative. And I was happy to see that.
Yeah, I love anything where you can scan the coupons in advance and then they just apply it to your bill at the end. But I wonder, because a lot of the manufacturers who offer coupons always offered them based on the idea that very few people would do the uptake on them. So I'm wondering, will this change the dynamic if more people start uptaking coupons? I don't know, but I love it. I do it myself. I do. And it's become so convenient. The other thing I like is any grocery store or whatever that allows you to use your phone to check out in the shopping cart, so you can just walk out without having to do that. BJ's is doing that. We have an Amazon Fresh
Yeah, they're
store.
definitely the leader in that, and I haven't done that experience yet, so I'm looking forward to just you're scanning all my stuff. I'm just walking.
I'm just walking out. That's all I do. The Amazon Fresh one is a little bit involved for me. It kind of is weird because the grocery cart like weighs your vegetables for you as
dang.
you put them in there and stuff. And sometimes I've noticed it gives me a lot of errors, which kind of pisses me off. But the BJ's experience is so nice. You just use your mobile phone and you just scan the UPC codes in your cart, walk out. The chick at the door, the person at the door, looks at your receipt and then you're out. It's so
Man,
nice. You bypass all those lines.
The future is here. It's begun. It's begun.
It's begun.
All right, so let's move on to our speed round. These are some tickers that we've gotten this week from some members and some fans. Starting off with Chen from Campbell, California. He's interested in a name I'm not familiar with. This is 8x8, ticker symbol EGHT.
They're one of the biggest players these days in voice over IP, the phone systems over the internet. 8x8. I know them. I know them personally, but I didn't use their service, but I had one of their salesmen really knocking on my door for a while. Gosh, it looks like they've come down in value. Let me look more at let's look at a 2-year chart. Yeah. I remember them trading up around the $35 range. Let me look at a 4-year chart. Yeah, so they're down, but it looks like I wouldn't say so. This company, I don't believe, has a lot of overhead. And you'll notice, so you might say, well, I think this is one of those companies that Wall Street has decided against. But you know what? They're still making money. And so I feel like they had all these investment dollars and they were playing the business game, but I feel like they're figuring out their equation. They're running lean and mean here. And so I'm not worried about investing in this stock. To give again, if I was a company consultant, I would tell a lot of these companies to start offering dividends because I think that would solidify their position in investors' minds, in Wall Street's minds. But with that said, I'm not a company consultant. I think that there's an opportunity here. Let's look at the option liquidity. All right, so this is trading every $2.50. You can see that they have the traditional option expiration strike prices. So they go every $2.50 up to $25 and then every $5 after that. So that gives us a little bit of limited. Let's take a look here. If we were to trade at the $5 range and at the $2.50 range, it looks like it's encompassing our channel, so we could probably get along. I wish that they offered their options at every dollar. That would make it a little bit easier to trade, but I think we could turn this into a premium trade. We want to make sure that we have found a top here. Let's go back maybe 1 year and just, well, okay. I'm not sure I want to turn this into a premium trade. I may want to, instead, I'm changing my strategy here. I may want to accumulate some 8x8 in the short duration using, I can't even do that because of the $2.50 spread. So here, yeah, you know what we're going to do? We're going to do a simple trade on this one. We're going to try to buy the stock at a low price. It looks like it's been kind of coming down as low as like $4.10. Try to get there at the $4.10 range. Sell some call options at the $5 strike price whenever it gets above $4.75. If you get exercised, great. You'll make $5 per share. And this will be more of a short duration covered call trade. Still try to leg into it. Try to create maybe a 50-cent spread. Don't worry about this being one of these trades that lasts as long as you can. It's not going to, but we could make some quick money off of this using our covered call strategy.
Awesome. That's 8x8. Thank you, Chen from the West Coast. And now
Thanks,
we're
Chen.
gonna bring it back to the Midwest. This is Eric from D-Town, Detroit, Michigan, interested in Rocket, RKT. This is the mortgage company.
Rocket Mortgage. They have a bunch of brands now. Rocket Loans, Rocket Mortgage, Rocket House. They've been actually doing a lot of acquisitions, mergers. I'm kind of bummed that they're still not really even breaking even. I'd like to see them make money since they are in the banking industry. They kind of come at it from a technology perspective, right? These are the people you can apply for a mortgage instead of the regular way of sitting in front of a banker and doing it that way. You can do it just online, and they're trying to take out the middleman, all that good stuff. Listen, if they test this line of support at $6.50 and give us a bottom, we might want to get into this. Let's take a look at the option chain and see how available Rocket is to us. Oh, look, they're trading every 50 cents. So that, versus 8x8, they're giving us a whole bunch of increments here that we can do our trades at. So that gives us a lot of flexibility as an options trader to get in there. So a couple of different things we could do with Rocket Mortgage. Number one, if we want to be creative and we want to get some stock in order to write covered calls on, here's where I would use my naked put strategy, otherwise known as a cash secured put. This is where we sell puts at a certain strike price that we're willing to buy the stock at. Say that price is $6. So if I was to sell the $6 put option, the one that expires on January 20th, the third Friday of January, and I go for that $6 strike price, I'm going to make 10 cents, 10 cents per share. That would be $10 per contract. I immediately make $10 for every contract. I need to make sure I'm willing to pay $5 per share or $6 per share. So, I have to have the $600 ready, but make cool $10 every time. And if nobody wants to sell it to me before January 20th for $6, I keep the $10 and I do it again. And I do it again until somebody's willing to pay me $6 for that stock, or willing to sell me the stock for $6. And then once I have that stock, I can write calls against it. And so whether I'm making income on buying the stock at the price I want to, or making income on selling the stock that I now own that I paid for at the price I wanted to, selling it at the price I want to sell it at, or give me income. See how that works with options? I create this income stream, and at the same time, I lock in the exact prices I want to buy and sell. It's an amazing tool, and if you understand what I'm saying, then Rocket, that's the strategies I would apply there. And if you don't, you should go listen to my pre-recorded webinar. We're actually going to be updating the examples in the webinar this weekend, so you may even want to check it out now and then check it out again on Monday to see new examples. But this is the type of stuff that really options was made for.
Awesome. Thank you, Eric from Detroit. That is Rocket. Moving on to another banking name, and this is Schwab, formerly Charles Schwab. This is Perry from Provo, Utah, interested in Schwab, ticker symbol SCHW.
I think among us option traders, Thinkorswim is one of the most used tools. I mean, I personally, on my own personal trading, was never interested in Thinkorswim. I use some different. I wouldn't even mention them here because they're just for nerds, right? But I started using Thinkorswim because we polled our users and found out that, hey, that's the platform they like to use because it's really good at analyzing options. And if I'm not getting any sort of kickback, but the creator of Thinkorswim, his name's Tom Sosnoff. He, once he was released from TD Ameritrade, he went on to start a new company, and he basically created a new software to compete with Thinkorswim, and he corrected all of the things that, on his wish list that he had done better because he got a chance to start from the ground up. It's called Tastyworks. Again, I'm not getting any kind of kickback, but you may want to check out that platform because it's pretty rad. With that said, TD Ameritrade was acquired by Charles Schwab a few years ago, and Charles Schwab finally announced the merger. It was Charles Schwab, when they first acquired it, ran them as two separate companies. So you could still go to a TD Ameritrade on the corner and you wouldn't have even known that Charles Schwab owned them. But they just announced that they're starting to actually, merge the two companies. There's not going to be a separate TD Ameritrade. You'll probably see, Charles Schwab's name appear where the TD Ameritrade and Thinkorswim, which was one of the biggest assets. A lot of people were wondering, what is Charles Schwab going to do with Thinkorswim? They've announced that they're keeping it. They're keeping the whole environment, all the users, right? So we're pretty happy about that. I'm sure that behind the scenes, they might be plugging Thinkorswim into Charles Schwab data and getting rid of TD, doing some cost cutting measures. Charles Schwab makes a lot of money, and they give it a lot of it back. I see that Charles Schwab is on an uptrend. Let's take a step back. So, yeah, they were riding high as all banks were. They kind of got kicked in the kneecaps for a while, and now they're slowly coming back up. If I use my best fit trend line tool here, maybe. There we go. You can see that they're slowly but surely recovering. They were at $95 at their highest, and they're at $83 coming up from $60. So, they're more than halfway back to where they were. I think banking companies as a whole are going to do well moving forward. They were never on the risky side of things. So I'm not really interested so much as Charles Schwab as a premium trade, as more as I'm interested in Charles Schwab possibly as something I own in my portfolio that makes asset appreciation and allows me to make that dividend. So yeah, let's use the cash secured puts to buy Charles Schwab at the price we're willing to pay for it. And if nobody wants to sell it to us at that certain price, the price we can count on to pay for it, then we'll make income off of it. And that's the strategy I would use here. In fact, if you're willing to pay $80 a share, we could totally sell a cash secured put at $80. That means we're willing to pay $80, and we would walk away with, right now, for every contract, we'd walk away with $143 in just income. And then, you have your $80 set aside. But again, you get to choose what price you want to pay. That's the beauty of options and using options the way we do. You choose the price you're willing to pay for something, and then you choose the price you're willing to sell it for. And if the people don't want to do business with you, then you make an income off of it. So you can't do worse than that. That would work really good in this situation.
Yeah, and it sounds like they're run well. They're making the right moves in terms of mergers, acquisitions. I know that me as a Charles Schwab banking customer, I'm a fan. And to hear that now these tools might be made available to me more naturally, that gets me excited. So definitely one for the portfolio. All right.
I like that you can go to any ATM machine. I hope this doesn't change.
Around the world.
Around the world, and Charles Schwab will refund all the fees, right? Not just the international fees, but the actual ATM fees. I mean, when you're really hard up and you go to the liquor store in the middle of the night and you get those like $4.50 fee. No, I don't know.
Yeah. The only thing that they do that's more unique than the other banks is they treat you more like a brokerage customer than they do as a bank customer. So they like getting set up is a little bit more difficult because they set you up as a brokerage account right away, and
then
it's
open up the banking account and link
pretty,
them.
yeah, pretty much. But from a user interface, their software has improved. It's become, you could see that they're utilizing this new technology.
Absolutely.
So I do see them doing well in the future, right? In 5-10 years, they seem to be able to consistently grow. So definitely one for the portfolio.
Yeah, I would, and the dividend is huge, 22 cents per share. So I would be, even if I didn't write covered calls against it, I would hold on to it. This would be one of those stocks I carry into my, retirement.
All right. So thank you, Perry from Utah. Wow. We're at the end of the show here. We're at the end of the year. Today's the last trading day of the year. Any final words? Any words of wisdom for what to expect next year? Do you have any New Year's plans? What do you
I mean,
foresee?
my words of wisdom, I just have to comment really quick, Sip, on the conversations. It seems my facial hair gets all sorts of comments, and it's funny because my barber, shout out to Frank at the Standard. My barber, I asked him, I'm like, should I change my side? He's like, dude, you come in every 8 weeks and want something different. So I don't even care, because next in 8 weeks, you'll come in with something else. So do whatever you want. So it's funny because it seems my facial hair creates a lot of conversations on the different social media platforms. And hey, man, I just like to I like to fly my favorite flag and go with it. So if that wows you, by all means, comment both positively and negatively. That gets me kind of cooled out and excited that people notice that stuff, because I've never been noticed in my life. So this is cool.
I'm just so used to your personality that I don't even notice it sometimes, right? And I think what's important is, hey, man, be you, right? Do what you think is going to make you happy. Who cares what anybody says?
And it's true. And, if you get into, and I can't say this enough, because I think 2023, for those people who are positioned correctly in their investment world, you're going to make a killing. Whenever the bear jumps out the window in the markets, those are my best years. And those were the years that actually got me to the point, right? It was the dot-com bust era that made me so much in my investment portfolio that I was able to leave the 9-to-5 workforce. And the way we trade is not day trading, it's end of day trading, and we only do per position maybe 1 or 2 transactions per month. And what that does for me is it affords me all this freedom during the day. And it's not just freedom with time, but it's freedom to be me, right? I can play with my facial hair. I can go to the gym. I can do whatever I want. Just be who you want to be. If it takes you, becoming an investor, full-time investor like me, to do that, that's what I think 2023 holds for us, Sip. For the people who can be on the correct side of the equation and get the money flowing to them instead of flowing away from them in the markets, use those tools, enhance their tool chest with the right stuff. I think you're positioned well, and it could be life-changing for you. And then you'll get to be whoever you want to be.
That's right. And so if you want to get involved, if you want to learn more about how we do that here at Trading Trainer, the links are in the chat. Head on over there. With that, if you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe button.
Tell your friends, dudes.
Tell your friends. Any big New Year's plans for you?
No. I'm going to be quiet here at the beach. In South Carolina, they have lax rules when it comes to fireworks. So I might go and watch people try to blow off their hands and stuff. But other than that, we're keeping it cool.
Yeah, I'm going to be in the Chicago area. So that's exciting for me. I'll be downtown.
Cold.
Actually, we're in the 50s today. The beginning of the week, it started off at -5. But now I'm in hoodie weather, so a little bit more comfortable. So I'm excited to ring the new year in with some local friends. And then it's back to the West Coast and back to 2023 and getting back into the swing of things. So that's very exciting. I'm wishing you and your family all the best. Wishing
Same.
all of our fans and followers all the best as well. Happy New
Same.
Year to everybody out there. And without anything else to say, Happy New Year. We'll catch you guys in 2023.
Take care, everybody.
Adios.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.